Welcome to the latest Evershed Sutherland Legal Insights podcast.
Hello, I'm Matthew Allen, Global Head of Financial Services at Evershed Sutherland. Welcome to the latest in a series of podcasts exploring current trends and likely future direction of private equity and venture capital markets across Europe and beyond. Today, we're going to be looking at TMT investment activity in private markets. And to help us do this, I'm delighted to be joined by my colleagues Anthony Cross, who's based in Munich, and Chris Archer, who's here in London. Welcome both. Good to see you. Maybe, Anthony, I can come to you first, just to sort of set out for us what the current state of TMT investment is in private markets as you see it. We've come out of a period of challenge, and what are you seeing?
So I think the first thing to say about the TMT market is this has become the biggest sector for deal activity generally worldwide. So whatever the state of the market, there is always going to be a lot of deal activity regarding TMT businesses. And that's what we've seen over the last few years. So the simple volume, the size of the industry means that even in the bad times deal-wise, there are going to be opportunities and there are going to be exits. That said, and you mentioned it yourself, the feeling is now very much we are coming out of a difficult market into a situation that, I think is unlikely to be a year where there is an M&A and private equity boom, but is likely to see increased deal activity compared to 2024 and 2023. And I think that will be driven to a large extent by the US. I think the sector generally is quite US driven, particularly in terms of exit opportunities. From a private equity perspective, looking at an exit, I think lots of the corporates that will be looking to acquire targets will be US based, as is typically the case. And I think the optimism that's currently surrounding the US economy, and in particular the US tech sector, will drive a lot of that. So while there will be differences within subsectors that maybe we can come to, my feeling is that 2025 will globally be a good year for private equity activity in TMT. How good it will be, we will have to see how the year develops. But I think I share the sentiment of other market participants that things are moving in a positive direction.
Chris, thoughts from you on that?
Yeah, I think Anthony's stolen a lot of my thunder there, but I think from sort of a UK perspective, we are seeing sort of exactly the same. I mean, sort of in 2024, tech M&A in the UK in general remained very active. The sustained activity in sort of transformative areas such as cloud, cybersecurity, data management, and of course AI. And I think as we go into 2025, we are sort of seeing that continued gradual uptick in momentum. I think it's fair to say 2024 was sort of primed for being a big year, but it started slowly, but we started to see an uptick. Obviously, we had a further boost in the UK as sort of rumours swirled around the October budget and the lead up to that announcement. And we're seeing a kind of a continued trend moving upwards in momentum as we move into 2025. So I think I'm relatively excited about the year ahead. I think we're going to see increased activity levels. And I think that's consistent with the number of sort of new mandates and conversations that we're having with clients around exit preparations and the desire to deploy capital. Obviously, in the private equity sphere, it's sort of well documented the amount of dry powder that there is and the pressure on investors to deploy those funds.
And Chris, just digging into that a little bit deeper, obviously TMT's a very broad church. Are there particular businesses or asset classes within TMT that are hot right now?
Yeah, I think that's a great question, Matthew. I think sort of as any readers of our sort of quarterly Market Eye report will know, so shameless plug there. Cybersecurity is one of the subsectors that I think is really exciting at the moment, and we're seeing a real surge in activity there. We completed a couple of deals in that space in half two 2024. I think it's obviously well documented the increased sophistication of cyber criminals means that businesses need sort of really well evolved countermeasures to that, and that's all along the spectrum really. We're not just seeing the largest corporates targeted who probably likely have the resources to be best positioned to defend those attacks. It's all along the spectrum. So and equally sort of crucial to consumer confidence, we're seeing weekly, if not daily, front page headlines. So I think that really serves as a reminder that those robust cyber defense measures are critical to businesses. A point relevant to M&A activities that we're seeing a strategic recognition that acquiring businesses that offer those capabilities is essential to strengthening those offerings. It's not just kind of being able to evolve in-house.
Anthony, what are you seeing in terms of trends within the TMT arena?
I think there's a couple of trends I would mention. Firstly, M&A activity in this sector, you can't talk about without starting with software businesses. I think software businesses make up the majority of TMT deals, are ultimately what drives M&A and private equity activity in the sector. And no podcast talking about technology and technology M&A is complete, clearly, without talking about the topic artificial intelligence. I think that's driving deal activity in a couple of ways. So firstly, there is clearly an increased demand for energy and for data centers. And our data center clients are growing at a massive rate. It comes as no surprise to hear that. And part of what's driving that is artificial intelligence and increased demand. So I think that will be a driver of deal activity as well. The fact that there is a need for funding, for financing for data center businesses. Secondly, coming back to the software topic, I think there are a lot of larger corporates that have the feeling, maybe they've missed the boat on the first wave of artificial intelligence, and the only way they can catch up is through M&A activity. So more in the sense of buying in expertise, buying in technology, and so on. So in terms of looking at potential exit opportunities, I think we see a bit of a trend there of larger corporates buying smaller businesses in order to get access to their technology, but also to get access to their people. I think we can't forget this is a people-driven business. And I think that will continue to be a trend over the years to come. And that, by the way, won't just be traditional technology businesses. I mean, to take one example, Siemens just did a very large deal in the US acquiring a software business. And I think there will be further examples of large corporates from other sectors being interested in acquiring targets which have particular capabilities, both in artificial intelligence, but also in the sector more generally.
So, Chris, maybe I can just come back to you. Could you share with us a deal that you've been working on recently or recently closed to bring this to life for us a little bit?
Yeah, I think one that particularly comes to mind and kind of represents that sort of uptick in momentum as well is that last year I think we started to see the comeback of the sort of the mega $1 billion deal. We completed a $1 billion+ deal back end of last year. It was a kind of a super aggressive process. It was a very hot asset, which kind of demonstrates the fact that the hot assets out there are still commanding high deal values and a lot of interest. We got to exchange within about 6 days of kind of being granted preferred bidder status, and then were pushed very aggressively by the sell side, but got to completion. Obviously got a lot of publicity, but I think it goes to show that the market is coming back. We've seen an increased number of those big mega deals over the last couple of years, and that gives us some optimism going forwards. That particular deal was a US buyer, and I think it sort of again leads into what we're sort of expecting to see in 2025. We obviously know that we're going to have sort of Trump 2.0 now. We've seen him cozying up to big tech. You can see the faces at the President Trump inauguration. So it feels like there's a lot of momentum in the sector.
Anthony, what have you been working on?
Yes, a couple of examples from my side, and maybe a bit to start at the opposite end of the scale from Chris, and to come back to what I was saying earlier around this being the largest sector for M&A activity worldwide, but it's also a very mature sector. So when people think about tech M&A, then you'll go straight to AI, you'll think about things at the cutting edge. Actually, there are a lot of businesses in this space which are pretty mature, are maybe no longer at the cutting edge, but are still good, profitable businesses. And I think that's an area that is very interesting for private equity. Over the last few months, we have completed a few deals for our private equity clients, primarily as portfolio acquisitions, so bolt-ons for existing portfolio companies of what and this isn't meant in a derogatory way, but boring German software businesses. They're not buying cutting edge technology. They are buying good, well-run, profitable businesses where the drivers for the sellers wanting to exit are maybe the same as in other sectors, succession issues, wanting to do different things, wanting new investment, and so on. So I think it's important when we're talking about this industry, particularly from a private equity perspective, to emphasize, the things that are important in other sectors are also important here. And not every deal is, a big cutting edge deal. There are things that just simply make sense where capital is being sought, and private equity, I think, is in a great position to help. Looking at my home jurisdiction in Germany, there are a lot of businesses where the founders are seeking to exit, and there are limited options for that exit outside of private equity. And we've certainly been able to help our clients with that sort of deal a lot. And then just briefly to mention, we haven't seen the hottest deal market over the past couple of years. We are starting to see that change. Only today, we got a note on a process we've been involved in that a buyer had preempted the auction process and had moved in to do a quick deal. That's the sort of news we've not been seeing so much recently. So I think that is a sign that the market is starting to come back.
Thank you. I mean, we could chat all day about this, of course, but just briefly then to finish, just tell us how you see the next 12 months looking, and you got any top tips for investors or sponsors in this coming period? Anthony, let me stay with you.
Yeah, so I think the next 12 months, we've said a bit about that. So cautious optimism, I think, would be my view. Top tips from a legal perspective, I think there is an increasing volume of regulation in this sector, whichever part of the sector you're in, regulation of the businesses themselves, but also regulation around deals. The antitrust has always been there. Foreign direct investment approvals are something that are increasingly required in this sector. My top tip would be alive to those topics. But in my experience, when deals don't happen or fall over in this sector, it's not because of legal or regulatory topics. There will be exceptions to that, of course, but generally speaking, the topics around regulation are manageable if they're looked at in due time in the due diligence process or in the transaction process. In that context, I would maybe just plug our M&A report, which came out last year, which emphasizes that message in the context of global antitrust and FDI approvals. But also speaking from my own personal experience, you see issues coming up in due diligence in deals, but on the whole, they are manageable. The reason deals happen or don't happen continues to be commercially driven. So I think my message would be, on the legal side, do the due diligence, involve advisors, but ultimately what's driving deal activity is the fundamentals.
Thanks, Anthony. Chris, top tips from you?
Yeah, I think Anthony sort of nailed it there. That sort of FDI, foreign direct investment, regulatory rules. We're obviously seeing a lot more aggressive regulatory involvement, and I think to Anthony's point, it's really about kind of thinking about those issues early on in the process. We're kind of very well versed with navigating through them, but it's always advisable to think about those early on in the process. It obviously follows that sort of in terms of sort of deal terms, we're seeing more sort of split exchange and completion deals as a result of that. But equally, we are still seeing the deals going through. There's a very, very small percentage that are actually referred. So again, it's just all about being prepared. And I think more generally, we're positive about the year ahead. We're seeing less and less reasons not to do deals now. So interest rates are falling, inflation's falling. We've got some political certainty in that we at least know who's going to be in power in a lot of the major economies in the world. So I think we expect another good year in tech M&A in the PE sphere and more generally.
Fantastic. Anthony, Chris, thank you for joining us today and for your really helpful insights. And of course, thanks to you, the listeners, for joining us as always. If you'd like to know more about our European or global private equity team or trends and opportunities in TMT investments in the coming period, please don't hesitate to contact Anthony, Chris, myself, or your usual Evershed Sutherland contact. Please look out for the next podcast in this series, which will appear on all our usual social media channels in the very near future. Thank you.
Thank you for listening to the Evershed Sutherland Legal Insights podcast.